Hi everyone, today is Wednesday, March the 20th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and I'm a little sick, so pardon me if my brain sort of lapses into, oh wait, what was I doing? So please forgive me for that. This is my third attempt at a recording because literally I couldn't remember what I'd done. We're going to start with the cues. Here's the thing, if we take a look at the cues on the day, we can see that price action is in a buy the dip formation. That's very easy to see. But the dips have been particularly, comes to sneeze, hang on. The dips have been a little bit more fierce than the SPY. And so it is still a buy the dip event. But we've got some congestion here at 440, right? If we break out 443, 446, since it's buy the dip, you want to wait, right? Let the market tell you what's going on. Give it a little room before you jump in and take a trade. Today, the volatility is going to be higher than normal, priced in the option chains. So the chains are going to be more expensive. So you have to be very careful about your positioning, or you're going to have a theta decay, which is going to rip you to shreds, okay? I'm not trading today, one, because I'm sick, and two, because it's an FOMC day, and after, I don't know, I think maybe I've gone through for 80 FOMC days over the 2 decades that I've been trading, maybe even more than that, and it just pays not to do anything. Sit on your hands and let it shake out. Okay, how do you want to make sure you use your volatility bands? Right? You wait for them to tell you what's happening. Let them expand, and then go, uh-oh, trend is down. I'm going to sell the bounce. And you look for the bounce. Here, trend is up, so you buy the dip. Now, if you buy the dip early and it starts losing your support, you get out because you can go, oh, I guess the dip is deeper. And then wait for the next space. Don't hang on and go, well, let me just average down. You're going to get yourself ripped to shreds, okay? Just don't do that. Now, you might notice that it says 9:30 or 9. This is a 9:30 candlestick. Of course, I'm in Portugal. It's really just 5:30-ish, and so that's what the storyboard is. All right, now let's go to the corresponding NQ. Right? Very sideways, very noisy. What's it telling us? Well, it tells us we're in a range, and our deeper dips are giving us value, and our spikes are still getting sold off, okay? But here's the thing. Trend should tell you what's going on. So first thing that's got to happen is either trend continues, you buy the dip off of the moving average or your volatility bands, and you take it all the way up until it stops making new highs and it starts breaking lows that have been holding as highs. Easy as easy does. Don't guess about where it's going to stop. Just follow along and pay attention to when the break happens and the volatility begins to expand. Okay? That being said, if you get down here and you go, oh my goodness, everything's downward, I need to short here, the second it stops heading downward is the key signal that you don't need to be shorting anymore. On top of that, your stochastic, which I use the double smoothing stochastic from William Blau here, that is going to start punching up, okay? All right, let's go SPY. And let's go to the daily first. And we can see that the SPY is doing fine. It is green, but they're also, you know, having pullbacks. So this was, what's today, Wednesday? This was Friday. We had a deep pullback into the 20, and since then, it's been buying the dip, right? Now, we have a lower high, so we need to get up over this 516. But if we can't, that means we're going to rotate down. So in this kind of formation, we could look for the resistance and say, wait a second, I'm going to try and sell 518. You could buy a 518 put spread or a 517 put spread, depending on what time of day it happened, and then you watch it fade. If it continues to bounce out and gets over 518.60 or so, you know you're sitting in the wrong direction. You know you're sitting in the wrong direction, right? Same thing, buy the dip. It comes in here into the 508, 510. Great place to buy a call, depending on what time of day it is. You buy the 510, 511. If it happens early in the day, you can buy the one further away, whatever. But if it doesn't bounce, you're sitting on the wrong side of the trade. Taking a look here, you can see we're making higher lows, but we're sort of dancing around this pocket. And we could do just about anything today, folks, right? It's just one of those days where, you know, literally anything goes. Watch the bands to tell you what's going on. You've got candlesticks going, okay, lower, high, lower, low, lower, high, lower, low. Your momentum is doing the same thing. You can go, oh, that's a short, so I'm going to sell the bounce. I'm going to wait until it comes into the VWAP, wait until it comes into the moving average, and I'm going to sell it. Now notice, let's say you're thinking that the whole day and it comes into this time, right, which is noon would be minus 4 hours. It would be 8 o'clock, something happened, right? And you go, oh, I'm selling the bounce. See, your stop needs to be clearly managed, and so does your size, because if you're coming in on news and the chart does this, you could easily get stopped out. Easily get stopped out. And as a matter of fact, it's a great short if you wait until after the news and then you watch the fade, knowing that momentum and trend are still in your favor. But if it stops heading lower, you got to get out. So the key levels have been noted for you there in the chart. The ES, let's go to the daily. You can see the ES is doing really better than SPY, right? It's doing way better than SPY, and I think it's because people are hedging using the equities, the equity futures. They're hedging inside of their own positions, and so they're simply just buying the bounce, and it's really levitating price. Take a look at this. Yesterday, it came into the 8 simple moving average, bouncing like crazy. It's still holding the 5230 area, but it's inside of the close of the prior day. And so what do we want to do? Who's in charge if we're inside of the close? Lower. It's sellers trying to get a foothold, but sellers have been smashed every single time. So the buy to cover is very likely to come very soon. Price action could easily break to the north, but every new high has been sold, right? See the big wicks? Sell off. High, 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 sell off. You get the pattern? Don't buy and hold the highs. That's what I'm telling you, okay? Intraday, you can buy that break and then let it go to the next area and then you get out, okay? You just don't want to hold these. Let's go to the 30-minute very quickly. We're seeing lower highs, but everybody holding the floor, and that still means buy the dip. It absolutely still means buy the dip. If we put the vol bands in there, we can see that it's fairly sideways. So you literally could go, well, you know, I'm going to buy support and I'm going to sell the top. And you could continue to do that until it breaks. And then you have to go, okay, I got to go. It's as simple as that, right? Watch these lines and then realize that we are still in a massive buy the dip formation. Absolutely massive. Okay, I talked about SPY, right? My brain. Let's go to the YM. Here's our daily formation. Let's take the vol band. Also doing remarkably well. Not as well as the ES, but still pretty well, right? This bigger dip here, the ES did not come into the 20 and hang out for days like this one has, okay? So, is this potentially a rising wedge? Yeah, potentially, but it's still buy the dip. It is still an absolute buy the dip. Do you want to buy the breakout? I mean, yeah, you could, but here's the thing. Buying a breakout action doesn't work unless your double stochastic stays all the way up here. And frankly, with all the wiggles, it's better to just come back and buy the dip. Just buy the prior high that you can see that was old resistance that got broken. Don't chase the new tops of these. Momentum is not telling us to do that, right? It's telling us that whenever we get to a brand new high, we're going to fade. And this is what we should expect. Okay, notice breaking the 20 again. This one hasn't done it. A number of them haven't done it yet, but this one has. Sideways momentum means we buy the dip. Okay, momentum is high, so you know instead of a 21, maybe you decide you want to look at a 30. to see how it's holding. 30 is looking just fine, right? Still holding the area. It's still by the dip. Okay, I like to look for where price action has gotten old resistance, new support. And that's really what I like to look at. I really like to look at. If, again, you're looking for options, well, first let's go here, make sure you have the numbers. Take a look at these levels. The measured move sends us all the way up to 40,000. And I can't help but believe some people want to test that number. That's just like a fancy number that they want to test, right? So it still is by the dip. If we want to do options and we're doing them intraday, it really is a good idea to wait for your volatility to give you some directional flow. So first, range expansion here tells you have a short, but then you have to look to the left. All right, you got support there. You don't need to take that unless it confirms in a breakdown. This one, trying to move to the south, who knows, right? My thought is, in this space, with this price action, I would say I want to sell the bounces into support, but I don't want to hang on for any kind of big, long move because they still have been buying the dip, all right? It will be very, very data dependent. Saying that tongue-in-cheek because we know we have the FOMC meeting, and he will give us general word salad. That's what's going on right now because he is waiting for data to tell him what to do. Oil is fading off at this level. I did expect it to, but I expected it to do that. I expected it to do it yesterday, and it rolled on to a brand new high. So my thought is there's a lot of bullish pressure here in the oil sector, and so the pullbacks are going to make for new buy zones. What is the ideal pullback here? We've got the EIA report coming in at 10:30 Eastern, maybe 80.50. I don't know. Pretty big number. And the closer we get to the election cycle, the more I think that this will start to stabilize. I don't know. Tinfoil hat, of course, but there you have it. Let's look at the volatility bands around the VWAP. This one's already broken, so it says, listen, sell the bounce, but this bounce has already been deep, and so this could be a place that is legitimately a buy the dip at this 82 level. Down here, when it first started breaking down, notice, momentum tells us first, watch out for a failed top and a break of support. That's what this tells us, okay? Especially if the moving average is flat. Once that happens, we have the movement, but now we're failing to head lower. Momentum has started to lift, so at the very least, it's very likely to go into the VWAP band. A lot of price action that could be upward flowing there today. Gold, giving back a bit, of course. Why? Because so much moves in currencies, interest rates likely hiking or holding steadily high. This is still a buy the dip formation, right? It is in a clear breakaway. The buy the dip could be 21, whatever this number is, 2140, right? That's potentially what we would look for. Or, it comes down into a steeper moving average that is near another area like 2096, which is a very nice support line for the initial breakout. All right, if we go to the 30-minute, again, we can see what is it doing. It's coming in to test old support zones, but the momentum is not breaking down here, right? This is a lower low, but higher momentum. So it's searching out support, likely to give us one of these wicks for price action back to the upside, but you want to be careful because it's already in a downward drift from a momentum perspective. See the range expansion? Watch, high, lower high, but price is higher. When we've got divergence, what you want to look for is, 1, a failure to hold higher, 2, a dip into support, and then 3, a failure to recapture the old high. And so this bounce here at 2162 gives us the short. We normally want to take profit near that third standard deviation band, and that's what's going on. All right, that's it for me, folks. I will see you on the other side of this bug, I hope.